Good morning, Anton. Welcome. Hello.
Thank you very much, Mark. A pleasure to be here with you, and good morning to you as well.
Thank you for joining us. We're going to be talking about Bitcoin this morning. First of all, I'm going to ask you to introduce yourself.
Yeah. Pleasure to meet the audience and to give a short, brief intro about myself. Originally coming from traditional finance, so I was a trader at a big hedge fund in Switzerland. Then at the right place at the right time, co-founded back in 2013 the second ever crypto company in Switzerland called LYKKE, where we built a crypto exchange. It was a massive success story, one of the biggest and oldest crypto exchanges in Europe. Did an exit 2018 and then launched a market making company, a crypto market maker. Because when you learn a crypto exchange, you learn how important liquidity is. And then that was the motivation for me to launch a market maker called Flovtech Technologies that I was leading as a CEO for almost 5 years, and market making and providing liquidity on all of your top tier crypto exchanges that I'm sure your audience has heard of. And then I did an exit in mid of 2022 and then launched together with a co-founder initiative called SwissAssetDAO, where we focus on enabling crypto native companies to invest into tokenized real world assets. Tokenization is something that's been talked about for more than a decade now in the blockchain industry, in the crypto industry. And many people say, that everything of value will be tokenized, in the future. And we're trying to contribute to that growth by education, advisory, and enabling, specifically crypto native companies how and in what way the best to invest into tokenized real world assets.
I think you pointed out just before our conversation that you were very keen for viewers to understand that none of this is investment advice.
Yes.
Investors must do their own research, and this is purely educational and informative, rather than you trying to promote Bitcoin or other cryptocurrencies. However, in that light, are you invested in the things we're going to be talking about? Do you hold Bitcoin?
So just to be very direct, I hold Bitcoin and I've been doing that for many years. And to provide a little bit of context, even though I have a trading background, I was literally a high frequency trader at a hedge fund. I'm not actually a trader, so day to day, I'm not trading or buying or selling Bitcoin. I see it literally on my side as a long-term investment. And, throughout these many years, I try to sell as least as possible. So really something, that I'm holding on to dearly, for long term.
I understand. At this point, could I just ask viewers to like the video, subscribe to our channel if you like what we're doing, and that would be very supportive to us. Talking now straight to Bitcoin. Bitcoin obviously has reached an all-time high, 69,000, and then it retraced a little bit from there. I was watching an interview of Tom Lee of Fundstrat on CNBC, who very clearly said he's somebody who's very keen on Bitcoin and cryptocurrencies in general. Let's be fair. He announced very clearly that there's research that proves that after a new high, Bitcoin often doubles quite quickly after it's reached that new high, and therefore he projects quite simply Bitcoin to be at $150,000 within several months. Do you agree with that?
So in general, I agree with the fact that, previous experience and history has shown that Bitcoin moves extremely fast, be that on the upside or be that actually on the downside. And the reason for that is, in my experience is actually that still Bitcoin is actually quite illiquid. So that means actually if you want to buy, large quantities due to the fact, there's a lot of demand coming in, there's very difficult to satisfy that demand in a very, orderly, low volatility fashion. And, if you just kind of reflect on the previous bull run or the one before, or even, the one in 2013, 14 that I was first a part of, it's literally the moves happen within a couple of months. So, I think Tommy Lee was actually kind of spot on there. I personally think that actually that's not going to happen in this context. I think we're going to have like a fairly, boring, quote unquote, summer, and then, the price will move out. But, this is something just a personal opinion, is because the data shows that the liquidity is coming in. I mean, the demand is coming in. And some of the data that, I follow very closely, and in my content, when I write about Bitcoin, I emphasize it very closely, something called flow of funds, where you can actually see how much, capital is coming into the crypto investment products, you see that we are having actually record amounts coming into Bitcoin. And, within, this 2.5, 3 months in 2024, we had more capital coming in than whole 2021. So just shows you what kind of massive demand is coming in, and that's very positive, for the price action.
Obviously, the SEC has transformed the game.
Yes.
They've tacitly said that Bitcoin is a currency, that it's a security. Let's say that. Some people may consider it as a currency as well, but at least I think in order to allow it to be used by ETFs and for the spot Bitcoin to be tracked by ETFs, implicitly that does say that they're saying it's a security. Do you think this is a new era for Bitcoin? Do you think now that that's been accepted that everyone should start looking at this as a new asset class?
Yeah. So first, just to clarify, is that the US regulator, doesn't matter which one you look, SEC or CFTC, they actually always stated that Bitcoin is not a financial security. Because if it were a financial security, it would actually be required by law that it's traded on regulated stock exchanges, which is definitely not happening with Bitcoin. So Bitcoin is traded on, many crypto exchanges around the globe, which many of them they're not regulated. So they're not unregulated or illegal, but they're not regulated, and Bitcoin, is just to say this very clear, is not a financial security. The spot Bitcoin ETF that SEC recently approved, that is a financial security. And in the US regulatory environment, there's a lot of, discussions, is Bitcoin a commodity or not? Because if it's a commodity, then CFTC, Commodity Futures Trading Commission, wants to have a hold on it. Or if it's not a financial security, then maybe, or if it's not a commodity, maybe there is some other regulators taking a look. But it just shows the complexity of the regulatory framework in the US. But having said that, with the approval of the spot Bitcoin ETFs in US, really this is a complete game changer for the crypto industry and a new era for Bitcoin, because today you can, in a very simple, safe, secure, and regulated way, you can access Bitcoin as an asset. And that is through the spot Bitcoin ETFs. And this is extremely important in context of investment process, is because today a lot of the asset managers, wealth managers, can actually invest into such products. Because to give it to the audience a little bit of flavor, a lot of the investment managers, wealth managers, they were not allowed to invest into Bitcoin directly or indirectly because they did not have the right products to do that. Because, for instance, let's say you're a wealth manager and part of your investment mandate says you can only invest into liquid products traded on regulated US stock exchanges. Since Bitcoin was not available in that shape and form prior to the spot Bitcoin, literally the capital could not come in. But today, you literally have an opportunity in a very easy way to access a product that gives you exposure to Bitcoin. And by that, I mean you can be a retail investor. You can open your brokerage account, click the button to buy the spot Bitcoin ETF, which you have now several of them with different fee structures, different profiles, but still all of them with the goal to trade Bitcoin. But the point here is, this is really a game changer for the whole industry and for the whole investment industry as well, because it's anticipated that due to the spot Bitcoin ETF, in the next couple of years, everybody will have, in terms of the portfolio allocation, a small exposure of 1% to 2% of their wealth into cryptocurrencies or crypto assets, specifically Bitcoin.
For those who wish to now look at other cryptocurrencies, they have to go to one of the exchanges. And as you said, quite rightly, they're not regulated. However, some of them are quoted on the stock exchange, as I understand. Yes. Would you recommend that people use a quoted exchange rather than non-quoted? Does this provide some level of guarantees and security?
Yeah. So here, in the context of access to cryptocurrencies and crypto access, there are two key features actually of any trading venue or any platform. One is actually the market characteristics. By that, I mean liquidity. And the other one is actually compliance and regulation. And there's usually, a trade-off between the two, just by nature. And then when you think about accessing crypto assets and cryptocurrency, you have to kind of wonder, how do you manage that trade-off? So to be very clear or very blunt, what I mean by that, the biggest crypto exchange on the planet today, and the most liquid ones, where it's the easiest in terms of the market, dynamics to purchase cryptocurrency, is actually Binance. But Binance is, not regulated or operates in an unregulated environment. In many times, it's not even clear what is the governance structure, like, which entity is operating where, who is, the beneficial owner, and, very complex things like that. So you kind of have a bit of uncertainty or lack of clarity on the compliance regulatory part, but on the other side, you have the best liquidity. So it's a trade-off. On the other side, you can, onboard and open an account with Coinbase, which is a publicly traded company in US. It's one of the biggest crypto exchanges on the planet, but not the biggest. But on the other side, you have lower liquidity there than on Binance. So there are these features of a platform that could be very important for you to make that decision. But if I would have to, give a recommendation, is actually that it's always best to first think about safety and security and risk before we talk about the upside, right? So in that context, it's best to open an account with a company that operates locally in the country where you are. Do a bit of checks, is this platform regulated in any way? Are there any protection for you as a consumer or as an investor if something goes wrong? And then think about later about market dynamics and liquidity and so on. So it's more, I'm recommending, first timers and beginners to focus more on reducing the risks when they access cryptocurrencies, then talk about liquidity, because already the crypto assets and cryptocurrencies are so risky that, you're trying to de-risk the situation as much as possible where you can.
Do all of these exchanges, or at least the well-known ones, the biggest ones, do they all offer a choice between segregated and non-segregated accounts? And which would you recommend?
Yeah, so some of them operate under the premise and under the promise to actually segregate the assets of the clients, both between the clients, but also to keep the assets away from the exchange itself. But to tell you, actually, this is not always the case even with the biggest crypto exchanges. So I can tell you actually a very concrete example. If you open an account with Coinbase, so this is the second largest crypto exchange on the planet and the largest crypto exchange in US. When you deposit your assets, your money, literally, on Coinbase, you're actually giving a loan to them. And it's this assets and these deposits on their balance sheet. And if something goes wrong with Coinbase in an unlikely but potentially possible situation, you're a creditor to Coinbase, and you're a subordinated creditor. So in plain language for the audience, it means if something goes wrong on Coinbase, you are far back in the queue of trying to recover your money. And there's a very specific reason, why Coinbase is structured like that. But for instance, even though on surface it might seem very safe and secure to, have your deposit in your crypto assets and cryptocurrency with Coinbase, actually, if something goes wrong, you are not going to have a lot of fun. But on the other side, you have a lot of smaller crypto exchanges that are operating offshore in less regulated jurisdictions, that actually offer segregation of assets, of the clients from the crypto exchange. So if the crypto exchange goes bust, the assets are segregated and they would be distributed back to their rightful owners. So this is kind of like the trade-offs that you kind of very well hinted at, like what platform to use. And that's where, you need to read the terms and conditions and the disclaimers, to educate yourself. But also in many cases, this kind of things you need to talk to an expert, because experts, or insiders, they know this kind of stuff. And, that's where education is very important.
Okay, Anton. Well, thank you very much for that. That's all we've got time for today. I hope we'll be able to talk again next week about tokenization and real world assets. Thank you very much.
Pleasure. And it was awesome. And thank you very much for having me.
Thank you. Bye-bye.